All right, well, there's a live look at what's happening in the pre-market. A positive tone upon us once again, despite all the uncertainty in the air, whether it's tied to geopolitical jitters or the unknowns on economic impacts from trade. Investors have been in a buying mood. That's true in the U.S., and as I was mentioning, it's been very true in Canada, where we'll start this day at all-time highs. Tim Regan is a managing director and a portfolio manager with Kingwest Company, and he joins us to talk a little bit about the mood of the markets. It's nice to see you.
Great to see you, John.
We could try to jigsaw all the different pieces of macro news in the air, but I think just to get to the heart of it, investors are monitoring but buying the market. They're monitoring the headlines, but they're buying this market pretty consistently. Why do you think that is?
Some of it is the results of individual companies. They've really, their business operations are growing. They haven't really stopped. Is the market too expensive or not? The market might be in the States, perhaps not in Canada, but there are individual stocks that are still, we'll say, reasonably priced today.
Is it so the earnings? So I mean, earnings is the other part of this. We're knee deep in all these different profit updates from various companies. Those same companies are being asked questions about all the macro stuff that people have to make sense of as well. If companies earn reasonable marks on how they are navigating through all of that, is that sort of play into the justification?
Absolutely. Yeah. I mean, earnings really drives the value of the stock market over time. But if you look at it, not only are the earnings coming in well, but the forward guidance is, I think, a little bit better than people think. You've had a number of companies as well announcing fairly large buybacks. And if the companies think that their share price is too expensive, why are they buying it back?
And I mean, could we almost reverse engineer the conversation here to be like, if the businesses feel confident enough, not just to invest in their business, but to use capital that they've got instead of for a rainy day to go back and buy their stock, then maybe anybody who's concerned about some big drop-off in the economy should sort of take a bit of a breather?
Well, I think we don't know what's going to happen.
Yeah.
That's the truth.
Yeah.
I mean, you're getting economic signals that are very soft, to say the least. However, you know, how are the companies going to navigate that? Some are actually not committing any capital to any new assets, plants, factories. And so once we'll call it the tariff issue is cleared up, if it ever is, or at least there's a little bit more clarity, then I think you will see the companies start to announce a little bit more capital spending.
Right,
so
maybe that's...
We'll see where it goes.
Yeah, to see what happens with actually committing to growth. We'll watch that. I mean, when you look at some of the earnings stories, there's so many to get through today. We were talking last hour about the health of the consumer measured through a lot of like well-known brands. Yesterday it was McDonald's. Today you've got Restaurant Brands, an example of a company that owns Tim Hortons, but also Burger King as well. Looks like their sales accelerated, but that they were leaning into the business outside of North America for some of that growth. So I guess that's another consideration. Global companies have a lot of different levers they can pull.
They have a ton of different levers. And I think that once you look at that, if you look through QSR today, they grew internationally. Tim Hortons is growing fairly well above expectation for same-store sales. They missed by, I think it was 3 cents today on the earnings, but a lot of that was higher interest costs. And they also put in that they had higher coffee and beef costs. So whether that's a result of tariffs or not, I don't know. But you will see a number of companies coming out and telling us how tariffs will be impacting things in the next few quarters. And it may not be what we expect.
All right, so I got to keep that on your radar. You know, the other thing is that we're kind of entering a stretch where there's some big long-term planning taking place. For a lot of businesses, there's these sort of thematic areas. You've talked about them before, like AI as well. You know, the Brookfield business, Brookfield's been in the headlines too. They had earnings. It covers a lot of ground, covers a lot of real estate, no pun intended. And they've got some long-term plans as well to sort of lean into AI infrastructure, all that kind of stuff. But Brookfield, I mean, so, you know, what did we learn from that company in their latest round of reporting, just as an example? Because
Sure.
you've generally been constructive on the company.
Yeah, we own Brookfield.
Yeah.
We own it. Our clients own it. Everybody owns it at our firm. Brookfield is a long-term play. And once you look at Brookfield, you talked about AI, the data centers, the infrastructure. But today in the earnings, I would say a couple things came out that were more notes. One was $35 billion of realizations, which means they sold a bunch of stuff. And they said they sold it at carrying value or higher, the vast majority of it, which is good because private equity has been slow to realize. The second thing with Brookfield is, in a little note, they announced that the insurance arm, wealth management, that would be an arm of their business, is now becoming more of a core portion of Brookfield. So you'll see a lot of resource directed there. And we think that business is fantastic for Brookfield and probably a little undervalued when people look at the Brookfield empire overall.
Interesting. Yeah, I mean, long-term performers, long-term compounders, a lot of times there's an insurance component to that. Okay, so before I let you go, sort of your last words to investors who are looking at a broader stock market that's been right around record highs, not really sure how to think about where to be positioned going forward. You're still sort of riding the momentum, would you say?
We're riding the momentum. We have a little more cash. We might be up to 10%, but that's really residual. But what we do, what I'd say to investors, is you have to look at the longer term. Look out 3-4 years at least. Because if you're just looking today, you could be very disappointed tomorrow if something turns. And the market is as capricious as Mr. Trump's missives. So we don't know what's going to happen tomorrow. But looking forward, we think we have a great long term, as long as our economies and our democracies continue as they do, we should do great in the next 4 to 5 years.
All right. You should have a conversation with some of our political leaders, too. Might be good to get some of that into the conversation.
Yes.
Tim, good to have you with us. Tim Regan, Managing Director and Portfolio Manager at Kingwest Company, joining us in studio.